We're talking gold and central bank policies with our next guest in the special Outlook edition of the Kitco Gold Report. Jim Rickards is the best-selling author of Currency Wars and the Death of Money, and he joins us now in studio. Jim, good to have you back on the show.
Great to be with you, Daniela.
Well, Jim, I couldn't wait to talk with you, especially after the Fed announcement last week.
Right.
Gold got some help this Monday morning. How do you see it set up here post the Fed announcement?
Well, I think in the short run, meaning for the next 6 months, I think it's going to be a little bit of a tough road for gold, but I see a lot of positive developments later in the year, and let me explain. The Fed is now on a path to raise rates. When I think of the dollar price of gold, to me, gold is a form of money. I understand it trades like a commodity, and there's a mining aspect to it. I understand all that, but the easiest way, I think the best way to understand gold, it's a form of money. So there's subjective demand for different kinds of money. So the dollar price of gold is just reciprocal of the dollar. So if the dollar is strong, the dollar price of gold comes down. If the dollar is weak, the dollar price of gold goes up. So if you want an outlook for gold, just say, what's the outlook for the dollar? The outlook in the short run is the Fed's probably going to raise a couple more times, probably March and again in June. By the way, I think this whole thing is a blunder. I think the Fed is making a huge mistake. They are tightening into weakness, which makes no sense at all. But they're going to do it anyway. So that's going to put a lid on gold, but eventually they're going to have to go the other way.
Why? You just think she was backed up into a corner, she had no choice?
Well, the first rate increase, I would say yes. Well, there are two things. Number one, yeah, they said loud and clear beginning of 2014 that they were going to raise rates in 2015. I said this time last year in late 2014 that they couldn't raise rates in 2015. Well, I got 7 meetings in a row, right, when Wall Street was saying March and June and September. I said no, no, no. But yeah, finally by December, it was clear. But they had to do it before the end of the year. They would lose all credibility. But that's not a good reason to raise rates. I mean, they should have raised rates 5 years ago. They didn't. That was a mistake. And now, so two wrongs don't make a right. Why are you raising them now into weakness? But the Fed doesn't see the weakness. Their model says that the economy is stronger, which it's not. All the other signs indicate that they're going to have to turn this around.
So we're seeing these divergent central bank policies. You know, as mentioned, we saw the Fed raise, by 25 basis points. We saw a surprise move by the Bank of Japan. Europe's still on the path to easing here. How will this all play out for gold?
Well, this is, gold, as I say, it's kind of money, so it's sort of caught up in the currency war. So yeah, Europe's easing, China's easing, Mexico's probably going to devalue, Japan, you look around the world, everyone's easing. The U.S., king dollar, I mean, the U.S. has become a sponge for all the deflation in the world. I actually think gold has done very well considering what's happened in other asset classes. So you look at oil, copper, iron ore, foreign currencies, everything's down a lot more than gold. So gold's holding its own, which is, to me, a sign of strength. Looks like a floor here. The question is, what's going to make it go up? The answer is the Fed's tightening into weakness. When even the Fed realizes how weak the economy is, they're going to have to ease. I expect Fed ease by the end of 2016, and then that's going to give gold a spike up.
Okay, because you expect the dollar to come down?
They're going to have to. The strong dollar is killing the U.S. economy. The Fed will be the last to know. You know it, I know it. The Fed will be the last to know, but they'll ease later in the year, either through forward guidance or maybe more QE or something. And then people are going to wake up and say, aha, the Fed has got no choice, they have to ease, and then that's going to give gold a spike up.
So Jim, you're a fan of gold.
Yep.
What other investments are you eyeing in 2016?
Well, Daniel, I recommend gold, even regardless of the dollar price. Everyone should have 10% gold in their portfolios. It's a form of insurance. It'll do a lot better in the years ahead, but even in a flattish period, which we are right now, it definitely belongs to. I like land. I like fine art. I don't invest in public equities, but I like certain private equities and some venture. I'm invested in some technology startups. You have to be very selective about those. They're not for everybody. So I've got pretty much of a private portfolio: gold, silver, fine art, land, and a big slug of cash. And people are surprised to hear me say that, but cash reduces the volatility of the rest of your portfolio and has a lot of embedded optionality. When things are falling apart, you can be the person who pivots to take advantage of things.
Finally, Jim, you have 2 best-selling books under your belt here. Anything else on the horizon?
Well, actually, 2016 is going to be a big year. I have a new book coming out April 5th. I'm sure we'll be talking about it, Danielle. It's called The New Case for Gold. And what I want to do is, and this book is available for pre-sale on Amazon. Like I say, it'll be out in April. But I want to make the 21st century case for gold. We all know about the old arguments, the critics say it has no yield, et cetera. There are easy rebuttals to all of that. But the 21st century case, Vladimir Putin has a 6,000-member cyber brigade. He can wipe out your bank account or close the New York Stock Exchange just like that. So you want non-digital assets. Gold is a non-digital asset. You can't hack it. You can't erase it.
Well, we can't wait to have you back on to talk about the book, Jim. Thanks so much for stopping by, and happy holidays.
Thank you.
And thanks for watching the special edition of the Kitco Gold Outlook. We'll have more for you throughout the week. Thanks for watching.